Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week. This particular week is all about sentiment. Why sentiment? Well, simply put, last week it was all about fundamentals, and man, it was a little bit messy. Last week those fundamentals came out very, very clear. Jerome Powell minced no words when the Fed announced their interest rate hike of 75 basis points, which is 0.75%, but that wasn't even really the big news. That 0.75% took us from 2.5 to 3.25. In the comments after the announcement, he stated that they're looking to go to 4.5. Well, if we already know where we're going, why aren't we going there already? And if we're only at 3.25, that means we still have at least 1.25 to go before we get to 4.5. Now, I think what's really happening is they're trying to get to this range of 4.5 to 4.75, and one of the clues that they gave is actually the core PCE number. The PCE number, as we talked about, is the personal consumption expenditure, and it is a measurement of some core inflation factors, a basket of goods for inflation. That PCE number comes out this Friday. Now, one of the things that mechanically has to happen for inflation to go down is that the Fed funds rate has to go higher than their barometer of the core PCE. Now, that core PCE has been 4.5, 4.6, 4.8. So the Fed trying to get to 4.5 while at the same time hoping to tamp down inflation and get that PCE underneath that amount is likely what their goal is. The troubling part is that he said they're not going to let up until they reach that goal of getting the actual inflation down to 2%. But we're at 8.3 right now. We were at 9.1, then we got to 8.6, now we got to 8.3, but we have a long way to go before it looks like they lift off the pedal. What that means is you're gonna see higher bond rates, a higher dollar, you're gonna see inflation consistent all the way into the rest of this year, as well as 2023 and 2024, which he also admitted. In between main comments, Jerome Powell said that we're likely to see inflation next year and into the year after that. And then Hold on a second. He actually just said we're gonna see inflation through 2023 and inflation into 2024. Man, I really wasn't expecting that part. I should probably clarify, I was expecting that we would see inflation through next year and into 2024, but the fact that they said that, that's a real admission. So they're leaving no question that they're gonna throw everything, including the kitchen sink, at trying to solve this inflation problem, and what that means short term is we're gonna see higher rates ahead. You already saw the mortgage rate react to this immediately last week, and even coming into this week, we're already seeing a reaction to mortgage rates continuing to go higher. As we've been talking about, the increased cost of borrowing money puts a crunch on the affordability for borrowers. That includes people looking for homes and homeowners who are looking to refinance, and that is going to cause a little bit of a slowdown in both the mortgage and the real estate markets. So if you're watching this video and you're looking to still purchase a home, what you should be doing right now is you should be getting all your ducks in a row financially, getting all your paperwork together, and being abundantly clear as to what your options are in the market right now, what neighborhoods you're looking to target as far as price for value, and what your affordability is and what you qualify for, plus or minus a 0.5%. Yes, even if today rates are 6% or tomorrow they're 6.5%, you need to get your qualification for a 0.5% higher or lower than today's current rate. With this type of volatility and fluctuations in the market, plus the Fed's commitment to continue increasing their Fed funds rate until they achieve their goal, means that we have to do some advanced planning, and we have to be very particular with what we're planning for as far as your credentials for affordability, but also what your debt to income limit is gonna be on your purchase price. The other thing to think about is if you're a homeowner right now, you need to start thinking about how much equity is in your property right now and preparing for there to be a leveling off and correction in the housing market. Now, some of this is just the function of how much it costs to borrow money, putting upward pressure on those prices that are going to eventually hit a ceiling. You know, just at the beginning of this year, rates were in the 3s, low 3.25, 3.5, but now we're talking about 6 and 6.5. And when the money changes and becomes that much more expensive that quickly, it really diminishes the amount that people continue to afford to pay for the new house purchase. And those new home purchases are what affects your most recent sales comparables when it comes time to appraise your house for a refinance. So to you homeowners that are looking to still access cash, get a home equity line of credit, we are really advising everyone right now that you ask the questions you need to have answered before you make the decision that you need to make to either take action or to just hold off. In conclusion, what's really going to happen is mortgage rates are going to be very choppy for the foreseeable future. You're going to see some days where the mortgage rates dip down and they maybe settle for a little bit and then they go right back up and they come back down again. It is going to be choppy. There is just no way around that. The general direction, though, is an upward trend still. And the reason it's an upward trend still is because the fundamentals that the Fed is citing have not changed for the better yet. So until they change course of direction, the rates will not change course of direction. So what we're going to be looking for ending this year and going into 2023 is we're looking for inflation to be going lower. We're going to look for a flattening of rates. We're going to look for house prices to curb off and correct. And when you start seeing those things happen and you see some affordability come back into the marketplace across all financial sectors, including every segment of consumer spending, then the Fed's going to be much more comfortable that they've gone far enough to then ease up some of the pressure they're putting on the markets right now. And in so many ways, they're already overtly telling us what that game plan is, and it's our job to be prepared for it and to talk to you about it. So if you're watching this video today and anything that we've talked about struck a chord with your particular circumstance or situation, you're looking to buy a house in San Diego, you're moving from outside of San Diego to San Diego, you need to move from San Diego to somewhere else because maybe you're PCSing, change a job, career, or lifestyle, please let us know how we can help you out. All of you who are watching this video that you're already in San Diego and you're looking to stay in San Diego, but you're not sure yet what you should do with your home equity, whether you should make changes or not to your current mortgage setup, you can leave us a comment, a DM, send us a phone call, a text, or an email. Let us know how we can help you. Let's discuss your specific situation and what might be the right next best step for you given the current market circumstances. For anyone watching this who missed our video on HELOCs, you can watch that video by clicking here on YouTube. And anyone who missed our conversation about ADUs, you can click up in this box on YouTube and watch that video today. Like always, please feel free to share this video with people you know, love, and trust, and let us know how we can be helping you in this marketplace. Remember, we don't know what situation you're facing unless you step forward and tell us what things might be plaguing your personal financial situation, and there might be a solution in the marketplace for you, but we don't know that unless we talk. So please let us know how we can help you out. Please share this video. Remember to like this video, subscribe to the channel. We're going to be coming out with a lot more videos, especially with these times coming up ahead, a quickly changing, very volatile market with a lot of moving parts. We're going to be making a lot of consistent video moving forward so that you have the best knowledge of what's going on so you can make the right choices for yourself and your family and your financial future. Thank you so much for watching. Have a great week, and we will see you again next week.